Hello there, welcome to another live webinar with us from Phillip Nova. This is your facilitator of the day. My name is Sri, and with us in the studio is Ming Lam from Trading Central, and with him is his analyst colleague, George Lam, not the famous George Lam, who was a singer back in the 80s and 90s, I'm told. But first, what are we speaking about today? Is the US dollar still king? And based on what we understand, the US dollar index has risen to the highest levels in 20 years, and the euro has attained parity with the dollar, and the dollar yen has surged to levels last seen in 1998. Will the US dollar continue its rally against major currencies? What are key macroeconomic factors influencing the Forex market? In this webinar, we have Ming Lam, Deputy Head of Research Asia for Trading Central, as well as George Lam, Analyst for Trading Central, who will be discussing the US dollar strength by providing both fundamental and technical perspectives. And Ming Lam, as bonus, will also highlight potential opportunities in the major dollar-related Forex pairs and commodities. All right, before we kick things off, I'm going to hand over the reins to Dominica, rep from Trading Central, who will be providing a short walkthrough of the various Trading Central tools you can gain access to on the Phillip MT5 platform. Dominica, if you're all set to go, you should see a prompt on your screen now.
Hello. Hi, everyone. My name is Dominica Lach. I am Client Success Manager from Trading Central, and I have a pleasure to present a couple of Trading Central tools that are available for Phillip Nova clients. So I just wanted to quickly let you know where you can find them. When you go to the Phillip Nova website, you can go to tab platforms, then you can go to Phillip MetaTrader 5 suite. And after clicking here, you will end up on the landing page where you can download register for the demo account, or if you have a live account, even better. You can then download a Trading Central indicators. So this is our plugin where you can find a set of Trading Central indicators and some additional tools like expert advisors that I'm going to just show you right now. So after downloading the plugin, you will see the whole set under indicators. Then the Trading Central indicators are listed here. But what I wanted to focus on today are the tools under expert advisors. So if you just drag and drop on the chart and click OK, you will have a pop-up window with 3 tabs. The first tool is called Forex Feature Ideas. And this tool allows you to find ideas if you don't really know what to trade. So this is based on chart pattern recognition. It's completely automated, and it finds patterns on the historical data. So for example, here on Australian dollar, Singaporean dollar, it found a double bottom pattern. You can hover over your mouse and read more about this pattern. And yeah, you have some explanation what was found. And based on this found, you can set up your trade, like stop loss and take profit, for example. This tool gives you 10 random ideas on the Forex pairs, some bullish, some bearish. If you do some custom settings from here, you can, for example, change the holding time for up to 12 hours, and then you're going to see completely new 10 ideas. The next tool is our economic insight. It's like upgraded economic calendar. And the third tool is a TC Market Bus. So this is a tool where you can actually find analysis of the news. So if you are interested about some specific assets, or you just want to see what's buzzing in the financial markets, you can come to this tool and see, for example, that the bigger the bubble, the more buzz in the internet about the specific assets. So we have the biggest bubble here is a crude oil. If you click through, you can find the analysis about the crude oil. And you can also find the news regarding this particular asset. So we just crunch the data and analyze them and help you make your trading decisions by providing like a very visual analysis for the specific tools. So under Phillip Nova, you can find all the assets available for trading on the MT5 platform, and you can also go by the specific asset classes as well if you wish. So that's it from me today. I hope you're going to enjoy the webinar with our analysts, and if you have any questions regarding the tools, please go ahead and contact Sri. Thank you.
Thank you, Dominica, for walking us through the various tools that you can use on your Phillip MT5 platform. And Ming Lam, if you're all set to go, I'm going to give you sharing rights right now so you can bring us back to the slide.
Hey, hello, ladies and gentlemen, friends of Phillip Nova and Trading Central. Well, we meet again, our once in a month webinar. Okay, so how are you? Excuse me, some problem. Yeah, it's going. Now, well, I'm Ming, and today I have bring along my very talented technical analyst colleague, George Lam. Okay, his surname is also Lam. My surname is Lam. I know in Singapore, Lam is you call it Lim, L-I-M, right? Mr. Lim. So any other Mr. Lim, Mrs. Lim, Miss Lim in the audience? Raise your hands. Okay, now today we are focusing on the Forex, all right, and you will probably know where on Phillip Meta MT5 platform you can find some instruments to trade with, right? Now, it is my style to put the conclusion at front. Well, you know, we are not academic. We are just by nature analysts and trader. When we observe something good in the market, we share with you. And at the same time, if there is something bad, we also share it with you. Okay, this is the use of this kind of webinar. Now, today we are talking about US dollar. In fact, we are only talking about 1 point. I forgot to tell you that we are not going to last long for this webinar this time. As usual, I target to finish it within the, let's say, 40 minutes. I don't want to consume a lot of time on this, but I hoped my main target is to get 1 point, a very strong point across to you, and hope you can benefit from it. Today's point is that slower growth, we are convinced that we are facing a slower growth in the US as well as in the global economy. Or some people will say recession. Okay, before you heard about the inflation, and currently you're talking about inflation, Federal Reserve interest rate hikes, right? I'm quite sure, we are quite sure going forward, you will see inflation being replaced by slower growth, recession. Okay, you will see economic growth sharply lower, okay, or no growth at all. Why? Let me tell you step by step. Okay, if we are getting this point, it will lead to another point. We expect the Federal Reserve of the US to be less hawkish. Okay, and then we will see US dollar rally, well, could be losing steam. But I would like to give a warning here that what we are presenting to you today doesn't mean that the US dollar will be up or down the very next day. Okay, it takes time to develop its trend, but we can see that the US dollar, as we will mention it later, the US dollar rally has lasted for over a year. Okay, over 20%, and in Forex term, in terms of the Forex market, it is quite dramatic, and well, it will not be surprising that a consolidation phase will come. Okay, and then I will talk about one page about stocks. You know what? Today we focus on Forex. We talk about Forex, but I know most of you are also trading stocks. Okay, so I will also talk about the stock market in one page, and maybe I will give you a hint that next month, September, we will have a webinar focusing on stocks, US stocks only. And that one will be presented also by me in Chinese, 普通话. I hope that I won't give you a hard time, okay? But also today it is also important. We are talking about Forex, okay? And the last point is that the potential market shaker. Okay, maybe some of you who have been following my webinar would know what I will point to. Okay, I leave it to the last part of the webinar. Okay, so let's go. Now, talking about macroeconomy, economic data, and I will present to you all those major economic data that we are considering crucial to the trend of US dollar. Okay, we'll talk about only those major ones. You will not be flooded with all those minor data series, minor figures. Okay, we give you only the major ones. Okay, to save your time. Now, CPI, Consumer Price Index, aka inflation rate. Now, in the US, in July, it was 8.5% per year. Okay, 8.5% growth on year. As you can see, it is well, it is around 40 years high. Okay, well, in end of 70s, start of the 80s, we have 14, 15 inflation rate. Okay, now we have 8.5. It's still high. Okay, but also it is also CPI. You can see that in June we got 9.1, and everybody shout, "Oh, the sky is falling!" And now we have 8.5, and also 8.5. I told you is year on year, but on a monthly basis, it is 0. Okay, I repeat. In July, when we compare July with the price of June, the prior month, no inflation. Okay, I note that on Twitter, you know Twitter, US President Joe Biden said, "Hey folks, this month we have 0 inflation, 0 inflation." And I see a lot of people, well, pointing out, "Hey, you are a liar, President, you are a liar." No. To some extent, President Joe Biden is correct. Okay, on a monthly basis, no inflation in July. Okay, next one, PPI, Producer Price Index. Very interesting, and we are also falling down on the year-on-year rate, 9.8, still high. Okay, but compared to prior months, it is reducing. And at the same time, month for month, there is July's price compared to June's price, negative. not only we didn't have inflation, we have negative inflation or deflation. Is it interesting? Now, this is the one I point out in my previous webinars, that this one is important, and the Fed weights this one more than those CPI, PPI, and we can see it. And in a downtrend, take up a little bit in June. Okay, next one, watch out, will be released on the 26th of August. Okay, we are happy to see that. Well, it is also on a downtrend, but watch out if it will keep on trending downward. Okay. Now, next pieces. This is very important. The yellow one. Okay, ISM manufacturing PMI. We regard this as the growth index. PMI. Whenever you read about PMI figures, the most important one level is 50. Above 50, we have expansion. Below 50, contraction. Okay, manufacturing. In July, we have 52.8, also in a sharp downtrend. What is the blue line? The blue line is the year-on-year change on Nasdaq 100. Sorry. Okay, so you can see that two charts are largely well synchronized with each other. And if the Nasdaq one, the blue one, is also a leading indicator to the ISM, we can see that the ISM, the Nasdaq 100 is pointing to ISM manufacturing, ISM reading well below 50, well below 50. Okay, you know what? Whenever this ISM, the yellow line, comes below 50, in the past, in most of the case, the Federal Reserve will stop hiking interest rates, or they will cut interest rate. Okay, so have a look at this one. We have indicating that the ISM is going to break below 50. No doubt about that. Okay, the next one will be released report on the 1st of September. Okay. Okay, now another one is the Consumer Sentiment Index, University of Michigan. Okay, in July we have a reading of 50. It's this one, and 50 is the lowest level on record, of this series of data. Okay, the lowest one. And in August, the first figure we are taking up back to 55.1. Okay, let's see the next one. Also, the next one will be 26 this month, to see if we are going to have some surprise. So you can see that ISM is going down, PPI going down, and we have zero inflation month on month back last month. And you can see that demand side, you can consider the demand side is shrinking. And if demand shrinks, anything to support price, anything to support inflation, think about it. All right. So then I will show you some very commonly used measure of recession. Okay, look at this one. This is a yield curve. Okay, yield curve is very simple. It is the 10-year Treasury yield minus the 2-year Treasury yield. Normally, if it is in negative territory, okay, we are expecting a recession. Now our negative inverted, the yield curve now in negative territory means, in other words, this yield curve is inverted. The inverted extent is 40 points. It is comparable back to the year 2000 when we had a dot-com bubble recession. Okay, so this inverted curve has been in place for some time already. Okay, at the time as I'm speaking now, it is still inverted. Okay, so it is, well, it is not wrong if I expect a recession. All right. Okay, now this is from the book. From the book, we know that whenever we have 2-quarter GDP growth in the red, negative, we are going to see it is recession already. But you know what? Our central bank chief Jerome Powell and our president Joe Biden, our Treasury Secretary Yellen, who was previously the chair of the Federal Reserve, all three of them, they say we are now not in a recession. No, we do not have recession. Okay, so but as an investor or trader, okay, you have to think for yourself. Okay. Now, this chart I present to my audience in the last webinar in July, back in July. I said the 10-year Treasury yield, okay, seems to be posting a reverse pattern, bearish, called head and shoulder, right? Very book type. And what is happening now? Really, it really formed a head and shoulder bearish pattern, reversal pattern, rise and then fall. And then we also see a neckline, the blue one, forming, meaning the reversal has been confirmed. Okay, now we can even measure from head to the neckline, to the shoulder, to the neckline, to our next target at 2.3%. Okay, although maybe it will pose some consolidation or, well, volatility, but this is our target, to look at the 2.3%. And then we have some interest rates discrepancy or some interest rate difference between countries. Okay, now the Fed is 2.5%. I mean, its key interest rate is 2.5. In the UK, we have Bank of England interest rate 1.75. Okay, the Bank of England has just increased interest rate by 50 points. Okay, and the Fed, it has increased its interest rate by 275 points. Okay, 75 points here, 75 points here. Okay, and on in Europe is in a very difficult situation. It has been put in a very difficult place on the energy side. Okay, regarding Russia is closing the tape of the natural gases, and even so, the ECB, they raised interest rate by 50% from 0. Okay, and the most inactive bank in the world should be Bank of Japan. Okay, they have been keeping their negative interest rate, negative 0.1%, wow, for quite some time. And there's no sign that BOJ, the Japanese, will increase their interest rate. Okay, and you can see this is the main driver behind the surge of dollar against yen in the past several months. Okay, oh, this is a big picture, and then this is lately, very late. We just get it last night. What did the Fed minute said? It said it will become appropriate at time to slow the pace of policy increases. Okay, they are now assessing the effect of those increase in the past several months. As I mentioned, they have just raised rates by 75 basis points two times. And At the same time, as you can see, the stock market, the US stock market has since November last year has tumbled 30%. Tech stock has lost 34%, and S&P 24%, something like this. And it is quite a lot. It is quite a lot for the risk assets. And you know what? The Fed is also facing some political pressure. Okay, so it is a public organization, and also it should be also taking some pressure from politicians. Okay, sure, I'm quite sure. And when you see the stock market has tumbled for 30% due to rate increase or people's expectation or people's fears of rate increase, and you know the pressure on the Fed to do something, whether it is going to reduce the amount of rate hike or the extent of rate hike or completely stop, or well, it could be possible. It could be possible. All right. And now the following, I'm going to show you the dollar index and also some interesting currency pairs that you should be very familiar with. But before that, I make a warning again. Okay, so do not trade on technical analysis alone. I'm a technical analyst. My colleague George is also a technical analyst. But when we give advice or when we explain the market, we do not just rely on technical analysis alone. Okay, we also gather the macroeconomic data, the trend, as what I have shown you so far in this webinar. Okay, so do not just make your trading decision only on TA. Okay, this is my warning. Okay, after that you can go. Now, US dollar index, we are now at 105, 106, something like this, and it is as our host Sri say, it is over 20 years high, in the highest level in over 20 years. Okay, and the highest one should be this one, 160, back in the 1984, 85, and after 85, in 85 you can check on Wikipedia or on YouTube. In 1985, there was a very interesting meeting among those was it G5? We have the US, UK, Japan, and some other. And what did they do? They gathered in a Plaza Hotel, and they say they plan to crash, to pressure the US dollar exchange rate. Okay, they succeed. Okay, after the meeting, they have an accord. It should be called a Plaza Accord. They agreed to let the US dollar drop. Okay, devaluate. And after that meeting, the US dollar dropped 25%. All right, and some academics, some investors said after they manipulate, or can I use the word manipulate? After they agreed to let the US dollar drop 25%, it indirectly led to the market crash of the US in 1987, and also the record high of the Nikkei in the Japan in 1989 to around 40,000 point level. Okay, and then it crashed for 25 years. The lost 25 years. Okay, a quarter century for Japan. Okay, so that was the story behind. And now we are back to our 20 years high. And by the way, do you know what is a US dollar index? Dixie. In simple terms, we call it Dixie. Whenever you're using Bloomberg, whenever you're using Refinitiv, Reuters, it is called Dixie. Okay, and in financial field, in trading, we call it Dixie, US dollar index, and over 50% it is euro. Okay, and then Japanese yen, British pound, so on, Canadian dollar. Okay, so you can see in most cases we see the Dixie is a mirror trade for the euro dollar. Okay, 57%. By the way, when we talk about US dollar index, we also always use ICE. What is ICE? ICE is an exchange, intercontinental exchange. Okay, this index futures is listed on the exchange. Also, there is another very famous future contracts that is listed on the exchange. Do you know what? Yes, it is Brent crude oil, Brent. Okay, so this is US dollar index. So we see the historic US dollar index levels, and then I tell you a story. It seems that 103 has been a very interesting level for the past, well, 10 years. Okay, 10 years or so. And well, in fact, US dollar index start to rally last April, May, something like this, and then it accelerate here. From bottom to peak, it has increased 22%, 22% in just over a year. As I mentioned, in Forex term, it is super. Okay, it is rarely seen. Okay, now we can see it is consolidating a little bit. Well, in a year, 22%, it is normal, and it is not surprised. It is not a surprise that it is getting into a consolidation phase. Am I right? Okay, so now maybe you're interested in this one. How to position ourselves in the Dixie US dollar index. It is a daily chart. Now the following chart we are showing you will also be a daily chart. It means that every one bar will represent the trading of one single trading day. Okay, so now we can see the recent uptrend from February this year seems to be coming to an end. And we can see that this red circle. Do you see the thin red line? This one in the middle. It is 20-day moving average, 106.1, and the thin blue line, 106.21. 20-day moving average has crossed below the 50-day one. Okay, I repeat, 20-day moving average has crossed below the 50-day moving average, and normally we see this is not good for an uptrend. Okay, but you see for the past few days we can see the Dixie also rebound a little bit. Okay, but all in all, we would like to see that if the Dixie got back to the key resistance at 109.3, we will turn our view on the Dixie back to bullish. So we whenever it got back to this level, we will say, hey, it will resume its uptrend. But until then, we say, well, it should be well on a very consolidation mode, and the nearest support is at 103.7. If it comes back to this level, another one on the downside should be 101.3. But at the same time, the tricky point is we see the momentum indicators here, MACD, RSI, we call it momentum indicators, and it is turning up. It means that their downside momentum is a little bit limited at the moment. This is why I say it is quite tricky. So nevertheless, we keep an eye on this key level, 109.3 on the upside and 103.7 on the downside. Okay, and yeah, the key point is we see the uptrend of the US dollar index seems to be well, it could be ending for now, but whether it is ending forever, I don't know, and you don't know. we just have to anticipate and well, and keep trading with caution. Okay. Another interesting point is this one. I got it from Refinitiv, i.e. Reuters. It say the CFTC let US dollar long position has been decreasing in the past period, and it dropped dramatically. It means the lat long supporting the US dollar's value is shrinking. Okay. So this is another evidence that we have to take into account. Now, before we get into the major pairs, major Forex pairs, I would like you to have a look at this major movement of these major pairs. Okay, Euro dollar, dollar yen, pound, and Aussie. Okay, for the past 10 years, the largest move you see for the euro was it dropped 12% past 10 years. But within this year alone, we have already seen euro dollar drop 12%. Okay. So it means that it is comparable to its largest downtrend in the past 10 years. Dollar yen in 2013, we saw a 21% rise. Same for this year. Okay, so pound 16% in the 10 years down, and this year we see maximum down 13%. Okay, and the Aussie down 8%, maximum this year. Okay, maybe the Aussie have some downside further. I don't know. And but for the euro, the two biggest constituents of the Dixie US dollar index, it seems that they have run their course. Okay, we have to keep monitoring, particularly the euro. It touched the parity 1-to-1 US dollar. Okay, 1 euro to 1 US dollar, and then it rebound. But going forward, how should we trade all these major pairs? And now, let me introduce my colleague, George Lam, and he will give you some account of those major pairs. George, are you ready?
Yeah, hi, evening guys. This is George from Trading Central. Just want to make sure that if you can't hear me, please do let me know. Now I'm going to go through the technical analysis of some of the major currency and commodities. First, we will look at the euro dollar. And on this daily chart, we can see that it has rebounded after reaching the parity level in July, and then started to show some early signs of stability. But nevertheless, though, the technical outlook is still less convincing, as it is captured by a declining trend line started from February. But bear in mind that the decline in euro against the dollar is already getting near to its largest one in the last 10 years. So at this point, we prefer to be cautiously bullish on euro, at least for the short-term future. From the chart, you can see that we would expect the pair to consolidate above the key support at the parity level. And if there is a break above the first key resistance at 1.0365, which also means a break above the declining trend line, it will be a more promising bullish signal and would open a path to the next resistance at 1.059. So we are cautiously bullish on this one. So we go to the next one. Yep. The next one we will be looking at is the dollar yen. In fact, for this pair, there's more signals pointing to a potential downward correction. If you look at the daily chart, we can spot a more clear bearish RSI divergence in July when the dollar yen reached a new high. It means that this rally is not justified by the RSI momentum, and it is a potential bearish signal. Then the pair is now captured below the 50-day moving average. And there is another bearish signal where the 20-day moving average crosses below the 50-day one. This is another bearish signal. So we will expect the key resistance to be located at 137.40 and a break below its recent low at near 131.80 would likely to trigger a further decline to 129.50 on the downside. So we are bearish on dollar yen, expecting it to consolidate more, and we would like to see a deeper correction for this one. So the next one, we will be looking at the pound dollar. Again, on the daily chart, we can see that the pair has already broken above a declining trend line in late July, but there is not yet a significant follow-through upside movement, meaning that currently the momentum is not very, I would say it's not very strong, or it's not very obvious. But
yeah, you're right. We can see from the MACD and RSI that momentum is there is, I can say, not imminent upward momentum for this pair, and we are watching closely at this 1.19 key supporting level. Am I right, George?
Yeah, I think so. Yeah, we would expect this pair to consolidate above the key support at 1.19. But as long as this level remains intact, we are hoping for a continued technical rebound towards 1.23 and 1.246 on the upside.
Okay, and one more point on our key support, the horizontal blue line. And whenever we say key support or key resistance, in this case, key support, it means that when the price eventually touch or breaks this level, we will unconditionally change our view to bearish. In this case, I means unconditionally. It means on condition of its breaking this level, right? And this is what we call technical analysis. And yeah, so in this case we are bullish, and we have set a key support here. Whenever it is broken, well, we change our view. Okay, and we have to, in times when things is broken, we change our view. Okay, so this is another way to say we stop loss. Okay, so are we going to the next one, George?
Yeah, sure.
Yeah.
Yeah, the next one will be the Aussie dollar. On this daily chart, we can already see some large swings in AUD USD during the last 2 quarters. But again, when it dropped to a new low in July, and then we saw a bullish RSI divergence, and therefore a rebound has started. But after a pullback in the last few days, it has now returned to levels just above the 50-day moving average. But again, this 50-day moving average is turning upward for the first time since March. So at the moment, it's quite tricky for this pair as well. It looks like it's going to rebound, but the last few days, the movement has been quite significant. So I would say for this one, we are also cautiously bullish. The higher low created earlier this month at around 0.6850 should hold as a key support. About this level, we keep bullish, and we would anticipate a bounce to 0.7145 and 0.7280 on the upside. Alternatively, just like Ming said, if this key support level doesn't hold, means if the pair breaks below 0.6850, which means that this pair is just keep swinging, and we will turn our view to bearish if we lost this level, and the pair is likely to go down to 0.676 and 0.668 on the downside.
Yeah, and Australian dollar and also Canadian dollars, we call them commodity related currencies. Well, in this case of Australian dollar, do you know what happened in the last few days? We saw the iron ore price, the major exports of Australia, just slide in price. It dropped in one session 5%, 6%, something like this, and the Aussie dollar just falls with it. Okay, so we can see also well, in the following we are going to see the oil price, and oil price in some cases is related to the Canadian dollar, as Canada is a major exporter of energy, oil. Okay, so whenever we trade this kind of commodity related currency, we also have to take more effort to look at those commodity price. Now, in this case, I want to point out one more thing, is that our overhead resistance here and is placed at the upper Bollinger Band. Can you see the thin red line? Okay, this one is the upper Bollinger Band, and then when we say upper, there should be lower. The lower one is where we place the key support. Okay, lower one. Can you see the thin red line here? Okay, lower Bollinger Band. And in the middle, we have the 20-day moving average. I repeat, you see three thin red line here. Upper Bollinger Band, middle one is the 20-day moving average, and the lower one is lower Bollinger Band. Well, in theory, just in theory, right? 95% of the time, price will trade between the upper and lower Bollinger Bands. Okay, that's why as a technical analyst, we sometimes we make use of the upper and lower Bollinger Band to set as our support or resistance levels. All right. Okay, so after Aussie, we are going to you can see the momentum indicators are not very convincing at the moment. That is, we could see a consolidation. And next one, we're going to see US dollar and Canadian dollar. George?
Yeah, for the Canadian dollar, is even more tricky, because if you can see on the daily chart, USD/CAD is trading within a broadening pattern since mid-July, means over the last 30 days or something, meaning that the pair is making higher highs and lower lows at the same time. Then this means that there may be disagreement between traders regarding the outlook of the Canadian dollar, because on the one side, the recent decline in oil prices is negative to the Canadian economy. But while on the other side, the US dollar itself has been weakening. So it caused some disagreement or argument among the traders, and hence we saw this kind of swings in the Canadian dollar. Assuming that the swing trades continue, we will expect the key resistance to be located at 1.303 on the upside. Below this level, the pair is likely to return to 1.2725, near its recent low in August. If breaking below 1.2725, it will open a path to 1.261 on the downside. So we are again a bit cautiously bearish on USD CAD.
Yeah, and on trading, whenever we encounter this kind of situation, and our advice is we hold our money, okay, and we have to see, we have to wait for some clear signal to get into the market. Whenever we see this well, very choppy situation, well, we suggest we do nothing at the moment. At the same time, we listen to webinars to see what Trading Central is advising, right? Our advice is for this pair, if you are not very confident on is trending, just don't touch it for the moment. Okay, find out some pair that have more convincing setup to trade with. All right, next, yeah. Okay, next, quite interesting, George.
Yeah, the next one will be the US WTI crude oil futures. Here is a daily chart for WTI. Well, the technical outlook just doesn't look good at all, because we can obviously see there was a double top pattern formed at around $124 a barrel. And now, again, the neckline has been broken. At the moment, it is also trading within a shorter-term bearish channel, and the downside momentum remains quite strong, because you can see that both the 20-day and 50-day moving average have been dragged down. So unless the price goes above the key resistance at $102, it is likely that the WTI crude oil will continue to trend lower, targeting $80 and $72 on the downside. But again, you can see that the target are quite far, because oil itself is quite a volatile asset. So we just need to be cautious on the price movement and volatility for this asset. But at the moment, the technical outlook just doesn't look good for oil.
Yes. Well, we can see that the oil price has already returned to levels before we saw before the Russian invasion of Ukraine. Okay, and at the same time, it also fits our story of coming recession. Okay, sometimes apart from getting those lagging economic indicators, you can also look at the price, asset price, like oil price, to predict or to have a feeling of what investors and what the market is expecting in the near future. Well, you can see this very bearish channel. You can tell that they are not expecting nice things in the future, in the near future. Okay, just like the inverted yield curve. Okay, they are showing non-confident, not much confidence for the near future. All right. Okay, so when we say convincing trades, just a slide before, with oil, this one should be a convincing trade to me. Okay. Okay, George, go.
Yeah. Okay. Another major commodity that we are looking at is gold. When we look at gold's technical pattern, well, it has in fact broken above a bearish channel started from March. This possibly signaling that the recent downtrend has come to an end. However, while it is staging a rebound, the momentum is not, again, it's not particularly strong. At the moment, it just managed to stand above the 50-day moving average. And so even we are preferred to be bullish on gold, we have to be cautious. The key support that we are looking for will be quite close, will be around $1740. About this level, we can still target $1810 and $1845 on the upside. But again, we have to be cautiously bullish on this one.
Yes, gold is quite tricky. Well, I have been in the finance field for over 10 years, and I have heard a lot of saying about the gold is related to inflation. Now we have inflation rate at 40-year high, and we still see that gold giving sometimes a fake breakout, something like this, and not very encouraging. And you can see the momentum indicators, not what we want to see, I can say. So to me, gold is a little bit, to me, it is quite disappointing and tricky to trade. Okay, so that's it. And well, as I promised at the very first of this webinar, I will spend one slide on stocks. This is it. Okay. In November to June, well, 7 months, we saw Nasdaq falling 34%. I repeat, 34%. It is huge. It is huge. So it is not a surprise to me that we posed a rather strong rebound when it reached a recent low in June. Okay. Up to now, it has risen for 24%. Okay. And we can see 20-day moving average, the red one, course above the 50-day moving average, a good sign, bullish one. And also momentum indicators, MACD, RSI are well placed. Well, RSI is 63. 63, we still have more upside to go to 70, 80. Okay, so in fact, you can see a turning point here, something when the red cross when the blue one across the red one. Of course, we have some other failing signal before, but this one is quite strong. Okay, and that's why on stock, I starting from the last two webinar, starting from June, I have told our audience members not to be very bearish, not to be very bearish on stocks. There's the reason why we are seeing the technical showing a revival of the stock market. But at the same time, we have to take a look that the stock index level is now very close to the upper Bollinger Band. Okay, and again, I will not be surprised if you see some pullback. And but to me, I expect the stock market has located its bottom. Okay, well, will there be another down leg? I don't know. You don't know. But to me, it is time to look for some good priced stocks to study. Okay, we leave it to the next September webinar. All right. And well, we come to the last part of the webinar, potential market shaker. And I think some of you will know what I'm talking about. Yes, geopolitical tensions. Where? In Asia. Okay, North Asia, not in Ukraine, not in Russia, not in Europe, but here in APEC. Well, to be more precise, it is the Northeast Asia. What these key players? US, Japan, yes, Japan, and of course Taiwan, China, Russia. And you know what I'm talking about. If there is some kind of serious conflict between these two player groups, we will probably see capital running into safety. US dollar. In that case, US dollar will rise, and stocks, the rebound will fail. In case we see a conflict, okay, a hot conflict You know what I mean, okay? Well, earlier this month, this lady, U.S. House Speaker Nancy Pelosi visit Taiwan, okay, and then just on the day she left Taiwan, China start a military exercise, just around Taiwan. Well, China did once before back in 1996, but that time that was only a one-off event. And now China seems to be keeping this exercise permanent. And well, they say, okay, we are playing military game here, and they for some time they say, okay, we finish, and the next day they start again. It seems well, think about this. You have some interesting friends keep hanging around your house all day long, and how would you feel? Okay. And of course, the U.S. will not let it go unnoticed. Okay, you see, Reagan, this called aircraft carrier, Reagan is going to stay in the region. Okay, against whom? You know it. And then at the same time, Japan, I mentioned Japan. Why? And well, it seems that Japan is getting involved and dragged into the action. You see, 5 Chinese missiles land in the economic zone near Okinawa of Japan. Okay, so why I talk about this? Because this whole picture of geopolitical tension is going to affect market 100%. 100%. That's why I keep mentioning this in every webinar. Okay. Well, this is this is the event that keep me up awake at night. Okay. Every time I go to sleep, and I'm just afraid that next morning when I turn on the computer, going to the website, I will see some interesting things happen in the region, and the market will have some interesting things happen also. Okay, so what dragged my investment or trading decision is this one. Okay, is the geopolitical tension here right in Asia, Northeastern Asia. Now back to this one. May I ask you a question? And you don't have to answer me. You just find the answers if you can for yourself. Why this lady, 80 years old, from the US, is so eager to visit Taiwan? And at the same time, question number 2, why China is so mad at her visiting Taiwan? Is something interesting happening? Okay, you check it out and let me know next time. Now, last slide of this one is Kissinger, okay, former U.S. Secretary of State, and who is very good friend of China, say the U.S. is at war with China and with Russia, and China is next. Okay, all right. Maybe he's talking the truth. Okay. Okay. So I'm pretty much finished on our focus on US dollar today. And do you have some questions that you want to ask, or you want me or George to work on?
Well, thank you so much for your insights, Ming Lam. Yes, there are some questions, members of the audience. If you have more questions for Ming Lam or George, head down to your question panel. It's somewhere at the bottom of your control panel. Just type your questions in there. Meanwhile, we have some questions. The first one is from Fabian. He's asking, is the Bloomberg Dollar Index, BBDXY, a better and more rounded index than the Dixie?
Yeah, I can answer this question. It depends on if you are using it consistently. Well, like us, we have been using the Dixie, ICE Dixie for quite some time, and our analysis and our report are all consistent using this kind of Dixie index. And I know Bloomberg has another one for themselves, and it depends on your purpose of using the index. Okay, sometimes maybe if you trade the index, well, as I mentioned, the ICE Dixie futures, they have futures for you to trade with, and of course you have to look at the ICE one. Okay, and for me, for us, so we look at the index as a general indicator, but for in kind of trading, maybe we look into the major pairs and rather than just the index alone. Okay, so the yeah, I think this answer the question.
Yes, it does. Thank you, Ming. Can we just backtrack back to the dollar-yen chart which you showed? According to the member of the audience, he's saying that it looks very much like an inverted head and shoulders. What do you think?
Inverted head and shoulder. I don't think so. I don't think so. And let me see. You mean this is the shoulder? And you know what? Inverted. Whenever we say inverted pattern, inverted. For example, in this case, you talk about inverted head and shoulder. It should be in a downtrend. It should be in a long downtrend, and we don't find it very convincing at this moment. So well, maybe I showed you what I mean. Back in this one, in the 10-year Treasury yield, okay, it is a long-term uptrend, and then returning down to the downside. Then we call it a reversal pattern. But on the dollar-yen case, it is I do not think it is very convincing to call it a reversal pattern. Okay, but anyway, what pattern, what name you give to the pattern, we just trade we look at the resistance, key resistance, and then any supporting level target, something like this. George, do you have maybe you have a better eyesight than I? Any comment, George?
No, not really. I think the point that you are talking is makes sense. An inverted head and shoulder should be seen after a longer downtrend, and then we see a bottom. But for this dollar yen, we have just seen some very little consolidation or downward correction. It's not like a long-term downtrend, and then we see inverted head and shoulder. For me, this dollar yen is more like a rounding top as well at the moment, unless it breaks above 137.40. Unless it breaks above this level, up to now, it still looks like a rounding top more than, I would say, an inverted head and shoulder.
Yeah. Okay, Sui.
Hey Ming, Fabian is from the audience is saying that that's a very good call about the geopolitics in the last webinar. Do you have any thoughts about the upcoming midterm elections?
Interesting. And well, we know that you mean how the political pressure will affect the stock market, and well, you know, the politicians they don't care about the stock market, in fact, or the forex market. Their first aim is to get votes and to get elected. And but one point I know that maybe I have to shape my words carefully here. This audience members is very observative. Well, I would suggest him to look deeper into the Republicans standpoint or their view about China. Okay, China. Sorry, I have to point this out bluntly. Both parties will target China, will talk something not nice, not good about China in order to get votes. Okay, but I don't say they are talking something not true or something very bad about China without any reason, without any reasons. But what would I do? I would look clearly at what they talk about China, or they do what they are promising to do against or for China. Okay, that will be important. If that we will get some insight on those U.S. politicians or U.S. Congress, how they will deal with China going forward, even after the midterm. Okay, this is very important. Okay, so it fit our geopolitical tension view that I have no doubt the tension will last, and it is also very important to see how the U.S. political parties will and do with China. Okay.
Hey, Ming Lam, do you have a pound dollar chart with you? Member of the audience, Vanessa is asking if you could discuss the pound dollar.
Pound dollar, is it this one?
Yeah.
Yeah. So what is the question?
Well, Vanessa is asking for your views on the pound dollar. Maybe you covered this earlier. Maybe a good summary of
yes. Okay, George, your strong point. Pound dollar.
Yeah, for this pound dollar, yeah, I can repeat again. We are cautiously bullish on the pound dollar because it has broken above a declining trend line, as you can see on this daily chart. But one thing that we have to be careful is that the rebound after this breakout has not been very promising or very convincing, because the upside movement is very limited. It looks like it has been stabilized a bit and keeps consolidating around the 50-day moving average. So if we are bullish on this one, we will set a closer stop loss or key support at 1.19. That is a quite close level because we are cautious. If this level holds, we are hoping a continued technical rebound. For the first target, 1.23, breaking above this level, we can then look for 1.246. But in an alternative case, if the pound dollar breaks below 1.19, then it will probably suggest that the technical rebound has failed. And we will then turn bearish on this one and looking for 1.175 and 1.161 on the downside.
Yes, so, very good. Yeah, as trader, we have to admit when the current this bullish setup fails. We have to admit when things fails. When is it failing? When our bullish view is violated by the breaking of the key support here. And at the same time, we can see that the momentum of the pound dollar is not very good at the moment. So I can say we are on the defense side. But we have to also look at the dollar. If the dollar's value is also losing steam, maybe we just have consolidation here. And well, we see we see. But well, we keep our stop loss or key support here. Well, I would like to say stop loss. Well, as trader, we have to we have to keep religiously to our stop loss. Okay. So yeah, as George said, we are cautiously bullish at the moment, also taking into consideration the US dollars rally may be coming to an end or losing steam. Okay.
Hey Ming, last question before we go. Based on what you've covered today with the currencies and commodities, what 3 products, if you have 3, if not 1 is fine, that you think that you're most excited about, that we should keep a close watch on?
Good question. Good question. I would say oil. Oil is it fit into our recession or sharply lower growth. Well, I can say prediction or anticipation. But at the same time, if you follow through this webinar, we say that the shaker, market shaker. I mean, let me put it very bluntly. If we are seeing a conflict, hot conflict, you know what I mean, in APEC, and well, dollar could jump like I mean oil, like dollar will jump. Okay. And this is what we expect. But if just for business as usual and for our recession theme, oil could be heading lower. Okay. And another one I would say the euro. Okay, euro is a pretty clear cut to me. At above parity, about 1.1 to 1, we are still bullish. Okay, if we breaks below 1 to 1 and stay below 1 to 1, sorry, we have to turn our wheel to bearish. No argue. Okay, George, are you having some?
Yeah, I agree with you, and I want to go back to the idea that we have already seen a very large decline in euro and Japanese yen as well, and the magnitude is what's getting closer to the largest one in the last 10 years. So what we are thinking is that for the rest of the year, at least, I mean within this year, maybe the downside for euro and Japanese yen is quite limited. Maybe we have already seen a bottom, or we have already seen a top for at the top of. Maybe we have also seen a top of for the dollar yen, based on the movement within the last 10 years.
Okay, sure. And I promise, if the market turns, the Forex market turns, we will give another webinar for our Phillip Nova audience. Is that okay, Sui?
All right, that sounds great, Ming Lam and George. Thank you so much for your insights.
Thank you.
And members of the audience, thank you for tuning in. Till our next webinar, you heard from Ming Lam. We'll be coming, we'll have an Trading Central webinar in September. That's a Chinese webinar, but we'll return for the English one in October. If you have topics that you like Ming Lam to discuss, or you have more questions, please send them in the survey form after this webinar. All right, till our next webinar, stay safe and take care, and may you have very successful trades. Good night and take care.
Thank you. Bye-bye.